We are live.
Me gusta el baloncesto, everybody. It's the one, the only V, the gorilla. I don't even know what I said, CJ. What did I say, CJ?
I, I didn't even catch it, but continue.
Oh man, I think I said me gusta el baloncesto. Does that mean I like basketball?
You like something? I'll have to Google that term and see what word you used.
Oh man, it's the one, the only Optimus Primate, and we are back with my main man, the man who is behind the Two Minds blog, Charles Hugh Smith. He needs no introduction whatsoever. Charles, how are you, buddy?
Hey V, hey CJ, Resto Paramundo, mi amore.
Yes,
I
yes.
mean, fake
Nice.
Italian from a Beatles song,
There you go. There you go. And me gusta el baloncesto to you too, sir. Oh man,
Hey.
what's new, man? How was your summer? I know you were in this very stressful place you were in last month, and taking care of serious things, and in a very stressful area of the part of the world called Geneva, Switzerland. And I'm glad you're back. I know you're suffering some PTSD. Uh,
Yeah, totally. Back from where all the rich people like to live, and back in the USA with us debt serfs. Uh,
I'm glad you're back to join the debt serfs, and By the way, while you were gone, Charles, our debt hit 20 trillion. Did you know that?
oh man, that's just chump change. I want to see them add a zero to that.
I know, right? Make it what it really is: 200 trillion. You count all the derivative nonsense, right?
Yeah, that's right.
Oh
Well,
man.
guys, I have to tell you, I'm cursed, right? I mean, and it wasn't the trip to Lake Geneva to help my brother after, he fell off his motorcycle in a little traffic accident and broke his ankle and his shoulder. But because those things happen, right? Especially on motorcycles. But every time I mention Bitcoin online, it crashes $500 or $1,000. So I realize I got to stop talking positively about Bitcoin because I wrote a piece about how the institutional support of Bitcoin is only going to rise, and then it drops 1,000 points that week, right?
Yep.
Then I slammed Jamie Dimon for his complete hypocrisy about Bitcoin being created out of thin air. I mean, as if the money in his bank isn't created out of thin air. And then Bitcoin drops $500 off of that. So I'm thinking, I maybe I need to start criticizing Bitcoin. Maybe it'll go up 1,000.
No, 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 no. Let's all criticize Bitcoin so it drops $2,000. We buy it up, and then it'll ride back up 5,000. That's what we
That's
need to do, Charles.
yeah. And isn't that what Jamie Dimon did? I mean,
That's exactly what it did. He backed that truck up, man.
I
After he
mean,
said he's
yeah.
gonna fire all the traders who are trading Bitcoin for being idiots. Oh my god.
Yeah, exactly. I mean, and I wish we had the power to do that too. Slam Bitcoin, say you're going to disinherit your daughter if she buys any. And then meanwhile, JP Morgan, the firm that employs him, has their banner on the cryptocurrency, some cryptocurrency conference in LA, I mean,
Oh
uh,
god. Exactly correct. Exactly correct.
yeah. Well, did you guys, I know you guys follow this closely, but somebody wrote a piece on Medium that basically said China's knockdown of Bitcoin, banning the exchanges, and then Jamie Dimon's antics and some other slams from other conventional money bigwigs, and that he was proposing this was a coordinated attempt to like bring cryptocurrencies and Bitcoin down. And so, I mean, do you think that is coordinated, or just a sort of panicked rush of central authorities?
That's a good question. I think it was definitely coordinated. But what can they possibly do at this point? Like for instance, for them to hit down Bitcoin or smash it down, and then, you got this rumor that was out there. Now the Chinese exchanges are literally saying, "Hey, nobody told us this. This is news to us." Where they said China's banning ICOs. Whenever they try to ban an ICO or they're trying to beat the price of a crypto down, the strangest phenomena begins to happen, Charles, and that is that these guys go ahead and start creating demand. It's instantaneous, and then you see the people buying it up. Look, here's the deal. I mean, traders have made a great deal of money on Bitcoin on the run up to over close to $5,000, right? The run up.
Yeah.
Yeah, for them to beat it down, they're going to offload and make their money, and that's what we expected. It's going to be like that, like what Cliff High always talks about. It's going to be that crocodile teeth all the way up, you know?
Yeah, yeah,
What do you
exactly.
think, Charles?
Well, I think those guys. I mean, clearly, guys like Diamond are doing the classic trading thing, which is issue a negative report on something they actually value, so they slam it down, panic selling, and then they're buying. Right? I mean, that would be a classic. And so you know he's using his market power to do that. But beyond that, I'm also fascinated by how quickly Bitcoin and the other major cryptocurrencies are recovering. You know, like when they used to get slammed, it would take months to recover. And now it's like, well, you know, they slammed it to 3,000 basically from 5. And then it's back at 4 like in a week or two, you know. So clearly, like you said, the demand is growing, and as an article on Zero Hedge this morning noted, the demand is broadening, and that's critical. You know, it used to be 90% of the demand, and it was in China, and now it's broadening out. So that's really good for the cryptocurrencies, because the broader the base of users and buyers, then the less leverage there is for any individual player, you know, whether private or governmental.
Absolutely correct, man. I agree with you wholeheartedly on that. You know, it's funny, like how many banks are involved in cryptos at this point, and it's funny to see that they are bashing it, just like they do with gold and silver, except this time they can't control the futures contracts. Thank God. And that's what
Yeah.
makes crypto so dangerous, that it doesn't fit into traditionally explained or traditionally set up in financial instruments. So, I mean, look at the attempts on ETF. It just simply fails because why? Anybody can mine. You know, anybody can mine. Nobody's controlling the printing press here, and that's what makes it very difficult to really put out there as a securitized instrument.
Absolutely correct. And so let's follow that thought into this whole thing of why are banks trying to develop their own cryptos, right? And we know they are because Goldman Sachs has pulled patents. JP Morgan's probably right behind him, you know, afraid of losing out to, you know, to Goldman in the rush to create their own private cryptos, right? Which then they would own the patents on, and they would try to commercialize this and put these into broad use so that then they could benefit. In other words, they could sort of steal the Bitcoin's thunder, if you will, right? Yep. By substituting their private crypto, which they could then, you know, totally control. So the other point that I thought was, but we have to be wise to that. In other words, if we refuse to use the bank and the government's own cryptocurrencies, except if we have to, like if they're going to refund my taxes, you know, in some new fake government crypto, fine, I'll own it for 10 seconds, you know, like get the refund and then turn it into something else. But that's something we have to be aware of, that they're going to try to co-opt the crypto space by substituting their own.
Yeah. Yeah, absolutely correct. Yeah,
absolutely correct. And then the other thing that's interesting, though, is that that they're not really describing the key dynamic here, which is fiat currencies are created out of thin air every time JP Morgan and Goldman Sachs and Wells Fargo issue a loan, right? And we all know that, and I'm sure your listeners do, but a lot of other people, they don't really understand how fractional reserve banking works, which is, you know, if the bank has $5,000 in actual cash deposits, it can go make a $95,000 mortgage, you know, can originate that mortgage out of thin air. And now there's like 20-to-1 leverage. So the banks all create private money out of thin air. That's their business. So it's really rich for Jamie Dimon to come out and say, well, the world can't, this doesn't function to just create money out of thin air. And it's all like, well, that's exactly your entire business model, jerk off. So the only thing he's upset about is he doesn't control this issuance of money.
That's all it is. It's cryptocurrencies are doing what remote printing, or what is it called? Remote printing? Is that what it's called? CJ?
Remote 3D printing.
3D printing. There you go. Yes. Cryptocurrencies is doing what 3D printing will be doing to so many industries. It's a disruptive technology. The fact is, they're mad that they don't control it. So JP Morgan thinks that they can create a quote-unquote blockchain, and then they control it. It's not open. And just because you create that, you can't call it a blockchain. That's just a ledger. That's nothing. And they just can't deal with it. And the funny thing is, they have such hubris about it, Charles. Such hubris that they think they're going to hold on to power in perpetuity. They're going to hold on to power, and nothing's going to shake them. But they're losing ground at an amazing rate.
Yeah, absolutely. And it's we can trace like every attempt to undermine or ban the cryptos. Like, okay, China's done this. All they've done is transfer the dynamics, the vitality of their economy to Japan and South Korea and other places that are perhaps grudgingly, perhaps enthusiastically embracing blockchain and the cryptocurrencies. And so the vitality of your economy is going to be more and more your ability to embrace blockchain, and decentralized currencies. And those countries like China or anybody else that tries to ban cryptos or take control of it or limit it, they're actually undermining their entire economy. And that's not yet visible, but I think it'll become much more visible, say, in the next 5 years, and certainly within the next 10 years. So, you can't cripple the blockchain technology and ban it in your country and expect your country to have a vibrant, wealth-creating economy.
Absolutely.
Yeah, you make a good point. Go ahead.
No, you were saying, Charles.
No, I was going to say you make an excellent point that's often missed here about confusing. Like, if you call something a blockchain, it doesn't mean it's actually a blockchain, and that's a point that maybe you can elucidate a little bit, because it's lost on a lot of people.
No,
because they don't know what a blockchain is.
Yeah, absolutely. I agree with you wholeheartedly, man. And just because the key premise of a blockchain is that it's an open ledger. If it's closed and nobody can see what the heck is going on, then you don't have a blockchain. You just have a ledger. That's all you have. You don't really have it, and nobody can manipulate it. That's the other beauty of it. What JP Morgan is doing is they're coming out with a ledger that they control. It's hilarious. It's a joke, and they're hoping that everybody's a sucker, that we've forgotten about their financial crimes. Here's a bank that's been fined to the tune of close to $40 billion, Charles.
Wow. And it should have been 400.
Yeah, exactly.
Yeah, I mean, those were wrist slaps. That's the really criminal thing. They were fined, for fraud and collusion and all the other crimes, but these are wrist slaps compared to the assets they have under management and their income streams. But that's a secondary point.
Yeah, absolutely. Which brings us to the next thing. Let's talk about the internet ghettos.
Does MySpace still exist? I'm not even sure.
Yeah, MySpace is it's gone bye-bye.
Yeah, it did become a ghetto, and remarkably quickly. And so you're of course referring to Facebook and Google, and maybe Instagram and all the other wonderful social media sites.
Yeah. Exactly.
Yeah.
Exactly.
Well, Are you referring to my piece about them being colonial powers?
I agree. Why don't you break that down for the audience? I think it was a wonderful article that you put on your website of twominds.com.
Yeah. So, and I didn't. This is not original to me. It was a line from one of the articles that came out that was critical of Facebook and Google. It was a book review of like 3 books written by tech insiders who were sort of deconstructing or taking apart Facebook in particular, but also Google's models. And you know, the model that all these tech giants use is they sell our information to advertisers. That's how they get most of their revenues, right? And so, and because of their huge traffic and number of users, then they dominate this online ad space. And so, what I was trying to follow up on was the idea that when you become the dominant player in a space that advertisers and users feel they have to be part of, or else they're missing out, then you become a colonial power, because you really, the users and advertisers don't really have a choice. They either play in your pool or they don't get to play at all, you know. And so that's the position that Facebook, with 2 billion users globally now, and Google with like 93% of all search in the Western world. Baidu, you know, has 90% of China, but Baidu only earns 7 billion a year from its search, right? Google earns like basically 7 times more in the high 40 billions. So Baidu's nice and all that, but they are a small player in terms of revenues. All right, that's what we're talking about, revenues. And so these guys can be like, they're sort of, I would call them neo-colonial, because they don't use force. You know, like in the good old days, you would overthrow a regime and then move in with your colonial government, and, you know, you would rule by military force, right? The British model in India, or a million other places. But a neo-colonial model is sort of under sub rosa. It's sort of under the surface, right? You coerce people sort of in subtle ways. And so now, like I'm saying, Facebook and Google, it's like, if you don't want to use their services, you're out. I mean, you know, like you've lost a huge customer base, and you lost contact with all your social media buddies, and, you know, so they have a power of coercion, because they've got the pool everybody needs to play in. And so that's where it's raising a lot of people's awareness that these are quasi monopolies. And the thing that worries me and other people is, if they decide that Rogue Money, for instance, said something critical about Facebook's, you know, income model, or Google's "don't be evil" policy, then they could eradicate you from the web, or at least from their pools on the web, and you would have no say-so. You'd have no recourse, and you would have no way to know whether why did this happen, because they would just say, oh, well, you violated our guidelines. You know, so they have this opaque mechanism that's totally up to the corporate entity to basically ban people from the internet, or cripple their presence. And so we're basically handing control of the internet to private parties who are only interested in one thing: selling our time, eyeballs, and information for a premium to advertisers. That's their whole business model.
Yeah. Yeah, exactly correct. And you know what? Like, I think the point you made it best. If you are not paying for the service, then you, my friend, are the product. That is an excellent point. I think people need to hear that, Charles.
Yeah, again, that's not original to me. It's become you know, widely recognized principle, and yet, so that's the model of the internet we now have. And so a lot of people feel that, you know, from the good old days of Wild West, of blogs and more independent media, now these conglomerates, if you will, or quasi monopolies like Google and Facebook, they're dominating the internet, because that's where people go, not because they necessarily love those companies, but they feel they have no choice. And so this is part of what makes things neo-colonial. And to take an example, in the neo-colonial model that we use now, I mean the Western powers and China too. I mean, the China's following the Western model, which is you go into a place and you make it illegal to own. To operate your life without cash. In other words, barter and self-sustaining stuff that gets banned. That's outlawed or it's taken away. So you have to go to work for cash. Then well, guess what? Here's the plantation, and it's the one source everybody has to go earn money. So everybody ends up working on the plantation, and you can call it. It can be like a plantation that grows stuff, or it can be a factory, or it can be some white collar call center. So you have to earn your money there. Of course, you don't earn enough, so then you need to borrow. Oh, well, guess what? Then we have this big banking system that comes in and issues you credit. And that's how we strip mine your wealth and your income, right? Through credit. Once you're a creditor, then we get to charge you interest, and then you really are a debt serf. And it was all done. You voluntarily chose to work at the plantation, and you voluntarily chose to take that credit line, and so that's how it works. It's a form of coercion, but it's beneath the surface, and so they get to say, oh, it was all voluntary, but they actually funneled us in. We really didn't have a whole lot of choice.
Yeah, exactly, and that's what it is. It's like we don't have a choice. They literally funnel us they herd us into these ghettos and say, hey, use this. And that's why I believe firmly, Charles, the future is not only the blockchain, and the future is the dark web. I think we need to migrate over there and start developing over there,
Yeah, no, you're right. You're right. And so the governments are finally, starting to awaken to the fact that they've let these monopolies arise, which are just as rapacious as the monopolies that arose in the 1890s and early 1900s that sparked the whole legal system of antitrust and this kind of thing. And of course, Google's already been nailed for antitrust violations by the EU. So yeah, we need the equivalent on the internet of the blockchain decentralized technologies, right? And eventually we need a whole new mechanism for distributing original content that doesn't rely on Google or Facebook or the mainstream media.
Yeah, exactly.
Yeah.
Data mining, brother. Let's dig deep into that one.
Well, okay, it's a topic I don't claim any expertise on, but we all know what data mining is, which is the idea that if we collect everybody's credit card statements and purchases and transactions, and we analyze and we get all their data on age and where they live and how many kids they have and what's the name of their dog and everything that we can gather about them, and we run this through a bunch of like supercomputers with fancy algorithms, then we're going to discover a bunch of really important ways we can target our advertising and basically make those people buy what we want because we've targeted them, we know them. And so on the Facebook model, if you are an advertiser and you want to go to Facebook and you want to target people in, say, southern Indiana with 2 kids, then you can do that. You can get the demographics, you can choose the income levels, and you can choose a lot of different variables, and you can target those people. And so that's the sort of nirvana that Facebook and to some degree Google is offering advertisers. Like we have the tools that you can target precisely the people who are most likely to buy your product or service. But I'm thinking this whole thing is like the emperor with no clothes, because when I see this kind of stuff on when I'm doing my own web search and stuff, I get ads for stuff from a week ago that I was looking at and I already bought.
Yeah, exactly.
So, and I don't need another pipe wrench. I'm really sorry. I just bought the one pipe wrench. That was all I needed. And so, but I'm going to see ads for pipe wrenches for the next 2 weeks, and they say this is a brilliant system. You got to be kidding me. I mean, it's a joke. Has anybody ever clicked on even one ad that next in their Gmail account or on their Facebook page, except by accident?
Yeah.
I mean,
Yeah.
I've never met anybody that admitted to clicking on an ad other than by mistake. So, and this is supposed to be this brilliant system. It's remarkably ineffective for all the billions that are poured into it. So I'm kind of thinking that maybe we're approaching a point at which the big advertisers will wake up to the fact that their ads don't work on Facebook or Google.
Exactly.
And there's already some indication of this. Like Procter and Gamble recently, a couple months ago, announced that they axed all their ads from Facebook, and their sales didn't decline $1. There was zero impact on their sales. Now, advertising is supposed to relate to your sales, right? If you withdraw your advertising, your sales should drop, and if you increase your advertising, it's supposed to increase your sales. So that is a huge data point proving that Facebook ads are meaningless. They don't work. Now, maybe they work for small businesses in certain locales, and I'm not saying the whole that you can't make it as successful in small scale, but at least at a large scale, it didn't work for Procter and Gamble. So you have to wonder, who does it work for?
You know what's scary, man? It's like these algos are getting so smart that it's as if you think about an item, you think about a product, and voila, magically, you're at a website and there's an ad and it's what you're thinking about. Because they have you so pegged. And people are like, oh my God, they're freaking out. Oh my God, Google's reading my mind. No, Google is not reading your mind. The predictive linguistics that the algorithms are using are able to predict what you want and able to show it to you, where it is almost like it's psychic and reading your mind. It's crazy.
Yeah, but here's the thing, as I pointed out in my piece about data mining, is most of us, number one, we have budgets, right? I mean, some people spend freely, like, impulse buys and stuff. And, that's what dollar stores are for, right? Yeah, okay, go to the dollar store and you can impulse buy 5 things and it's $5. But most of our big spending is either planned in advance, or it's like contingent on stuff happening. Like, a family member gets in a motorcycle accident, and then you have to go and take care of him. So you're going to buy an airline ticket you weren't intending to, and so on. But that's a one-time thing, And so this sort of predictive thing is only useful to advertisers for purchases that the person is planning, and the rest of it's just wasted, because I don't need another airline ticket. You can run ads, until doomsday, and so you see what I mean? Like, it's actually intrinsically a failed model, because most of our spending is contingent on stuff happening in our day-to-day lives, and so it can't really be predicted.
Yeah.
And so hence the stupidity of getting an ad for a week or so for something you already decided not to buy.
Exactly.
Yeah.
It's nuts, man.
Yeah. But as you say, it's spooky in the sense that, like, you do a search and then 5 minutes later, whatever website you visit, there's an ad for whatever it is you just looked at. We all understand the idea, which is, hey, maybe you'll choose our product because you looked for a similar product. But, it's there's huge limits to that model. So I personally think, and this is based on conversations I have with people in the ad industry whose job it is to try to limit click fraud. What would really be powerful is if Google and Facebook differentiated sites with original content, like Of Two Minds and Rogue Money, from all the clickbait sites that are just a bunch of links, right? That are designed to maximize revenues when people click on it. And so they don't differentiate at all between clickbait sites and like original content like ours. And so the readers and listeners of original content sites, they're going to be much more valuable consumers than like consumers who got basically tricked into going to a clickbait site. That ad money is completely wasted. So, I'm just kind of trying to describe how there's other models that would be so much more effective for advertisers, and that Facebook and Google don't do. They don't separate out, legitimate original content from just rubbish.
Right. Exactly correct, man. Exactly correct. And if you notice, it's incredible. It truly is incredible, to say the least, man.
Yeah, and so we can also. I'd like to tie this into another thing I'm always ranting about and writing about, which is growing wealth and income inequality. If people are making less money after you subtract inflation, well, then what are we advertising for? Because they don't have any money to buy more stuff. And so then you're saying, well, you're advertising to take a customer from somebody else for you, but to your business. But the thing is that's not growth. They can talk about all this fake measures of growth, GDP and so on. But if you're left with an economy where all that businesses can hope for is to steal a customer from somebody else, that's a zero-sum game. That's not growth. That's not a vibrant economy. And yet that's really what we have. For the bottom 95%, then it's like, well, we're actually have less money to spend every year. And so we don't, all those advertisers aren't advertising for new customers or new purchases. It's just like stealing from somebody else, right? So yeah, and that's the model that we have. But it's that's why everything is stagnant, really, And so once advertisers catch on to the emperor has no clothes, then maybe they'll start demanding some other models. And the other thing, if you guys don't mind going back to cryptos, is
Sure.
I wrote a piece recently about the institutional ownership of Bitcoin, and I was trying to describe how that works if you're an institutional money manager. And I used to work for a small quant shop in San Francisco back in the late 90s when it was a real go-go. That was the .com era.
The go-go 90s, Charles.
Yeah. Well, and now the whole ICO space feels a lot like that, and the ICOs are kind of the equivalent of the penny stocks, and guys would say, hey, they bought a new tech company for $1 and it went to 40, and they can buy an ICO for $0.10 and sell it for $5. I mean, there are immense fortunes being made. But the real value in the tech era was, of course, buying Amazon for 20 or whatever, like Amazon and Apple. I mean, companies that were generating wealth, and just kind of like nowadays, if you're buying Bitcoin, Ethereum, Dash, Monero, I mean, these are currencies, cryptocurrencies that have they have a role in the actual economy. They're not just a speculative thing like a penny stock with lots of promises and vaporware and all that stuff. So we sort of have that same kind of frenzy, like everybody's making money buying everything, but the real value comes out later in a handful of stocks, right, or a handful in this case of cryptocurrencies. But my point was, when you get calls from money managers, in other words, the financial industry has a lot of people who have, they have 100 million or maybe $1 billion under management, right? And they have certain guidelines. They can't invest in penny stocks. Often they use those thing of, you can't buy a stock that's under $5. But there's also limits on what they can buy in terms of risk, risk management. And so they typically, buy stuff long. In other words, they can't short except to a certain degree of their portfolio, or they can't buy derivatives. And so they work under the rules, and their whole job requires them to earn a return that's at least equal to an S&P index fund, right? Because if you can't beat an index fund, then why are we paying you $300,000 or $400,000 plus bonus, right? So so that creates a real herd mentality, because the sad truth is 95% of us just don't have the character or moxie or luck or whatever to beat the S&P index funds consistently, year after year, 5-year returns, 10 years. I mean, the number of people who can do that is like infinitely, I mean, very small, right?
And they're not managing pension funds.
Yeah, that's right.
A bloodbath over there.
Yeah, exactly. Because by the time you put all these limits on them, well, then you're limited to like, 2 or 3%, unless you're going to take some crazy risk, like buy like, Z-rated junk bonds or whatever, So anyway, so then this is how you get like institutional ownership in companies like Amazon and Apple. Everybody looks around and goes, man, I'm getting killed here. I'm underperforming. What is everybody else winning with? Oh, well, they all own Apple and Amazon. So if I have to go buy that stuff so that when my quarterly statement goes out, my customers and my bosses will see that I own some Apple and Amazon. Then, the fact that I got my butt kicked will at least be hidden because at least I own the right stuff. And so this psychology is what drives institutional ownership of companies, and it's the same thing, I think, and what I'm proposing will happen to Bitcoin and the other major cryptos is people are going to look around, they're going, all these guys are making a ton of money owning Bitcoin, for example, or Ethereum or Dash, and I don't own any. I've got to have some because it's getting to the point where my underperformance is, I'm risking my job here. And so if at least if I own some Bitcoin, then I'm going to look like I'm with it, like I'm going to make money next quarter. And so I think this psychology is very powerful. And my friend Mish Shedlock, who's a
we got to get Mish on the program.
Yeah, it would be very interesting. And he sort of criticized my thing and kind of made fun of me on the institutional ownership. Well, he's a Bitcoin skeptic. He can't believe that he feels it's a bubble. So yeah, he's kind of missed the boat on cryptos. Yeah, he's missed the boat.
I'm gonna have a talk with Bish. I'm gonna have to set him straight.
Yeah, and we agree on so many things, but he doesn't see any. He disagreed. He felt that there was no institutional dynamic for owning cryptocurrencies. And so the good thing about having an opinion is the market will tell who's right and wrong. Like, either Mish will be right or I'll be right, but we won't both be right. But I know the psychology of these guys that actually manage serious money, and when things get hot, they've got to start owning that stuff. So I think we're on the cusp of a major run into institutional ownership of the major cryptos.
I agree wholeheartedly, without a doubt. Yes, we are in for a major run. They have to. Where are they going to go? Bonds?
Yeah.
Where are they going to go when it collapses? No, they're going to move it. I agree with you wholeheartedly, man. I think you were one of the first I heard talk about it. I've been speaking about it. So many other people who have a head on their shoulders who can look at this analytically without being married to a paradigm, which is what guys like yourself and what we do here at Rogue Money. None of us are married to a paradigm. We're all pragmatic about it. We see this as like, look, when you have quote unquote safe haven assets like bonds, and equities going kaput, where are you going to go? You're going to go into gold. You're going to go into precious metals. You're going to go into cryptocurrencies.
Right.
Where else are you going to go? People are like, oh, Bitcoin's volatile. Bitcoin's volatile. My God, if you've been tracking Bitcoin since 2011, like we have, I could eat the volatility. If I was in a long-term play with Bitcoin, I'm doing very well in the last 6 years.
Huge. I mean, you could buy a place on Lake Geneva. I mean, literally, $1,000 in Bitcoin back in the day, and even volatility. Like I look at Ethereum was like 225. I mean, like 2 weeks ago or something. Now it's 300. Hey, that's a nice return for an entire year. Bitcoin touched 3,000. It's now 4. That's an excellent return for an entire year of a money manager.
Yeah.
I mean, they're trying to get to 6% or something. And here we just, they could have scooped 25 to 30% in like 2 weeks. Huh. I mean, volatility is a trader's best friend. And so these guys are supposed to be traders. I mean, they couldn't ask for anything more. And so, and look at what happens when these guys can't beat the S&P index. Look at all these hedge funds which are liquidating.
Yeah.
Right? Why are those guys getting killed, right? Why are there redemptions I mean, guys that used to manage a couple billion, like Hugh Hendry, his fund was down to 30 million. What happens? How does your fund drop from over a billion to like 30 million? Well, you know, you're not hitting it. You're not making money for your customers, right? And so everybody that was in the crypto space has made a ton of money, and everybody that poo-pooed it and said it's a bubble and it's going to go back to 100 and you know the usual stuff, they've all gotten killed. So what do you say? Who was right and who was wrong?
Correct. Correct.
And
right.
So it's not polite to say this, right? Like we're all polite people, so we don't say, hey, everybody that was skeptical of the major cryptos has gotten killed in terms of their yield on so who's made the same money in other endeavors? You know,
Yeah,
I mean, it's impossible. Are you kidding me? I mean, that's why I was mocking JP Morgan. Yeah, they made 75% return over the last couple of years. Well, Bitcoin went up tenfold. Well, which one do you wish you'd owned?
Bitcoin. I mean, think about it. 2011, Bitcoin price was what, $4.
That's crazy.
Yeah, I mean, think about it. People are like, oh, it's in a bubble.
Yeah, exactly. And you know, I did a chart. I don't think I did it I didn't post it publicly, but you know, if you look at the you know, if you're a chartist, if you're interested in technical analysis, you know, then you look at stuff and you try to find a pattern, you know. And so the pattern with Bitcoin is it you know, it builds momentum, it goes up and hits a new high, and then it gets crushed, right? It plummets. I mean, it drops like 30 or 35%, whatever. And then it quickly rebounds and then hits a new high. And that pattern, you can go back, if you look at a chart of Bitcoin, you can go back and find these sort of self-same patterns, you know. That seems to be the way it works.
That's it. Exactly right. Yeah. Charles, thank you so much for being on, man. It's always one of the best times I ever have is with you. So why don't you give out the people how they can follow you, your website, if you have any services, your books. I mean, you're written a lot of great books, as well as how people can follow you.
Okay, well, thank you very much for letting me rant and rave about my favorite topics. And come visit me at of2minds.com, free samples of my books, and more blather than you can possibly read. And so thank you very much for the opportunity to talk about cryptos and everything else.
That's always a pleasure. It's always fun to have you on. We should do this more often. With that being said, folks, I am the one and only Optimus Primate, the hairy monkey of monetary mayhem. And we are all set. CJ, take it away, buddy.